If you're someone who works in the service industry, maybe you're a server, bartender, valet, or hotel staff, you probably know the thrill of getting a handful of cash at the end of a long shift. There's something satisfying about those crisp bills, right? But if you're not a fan of paying taxes and you rely on those tips to make ends meet, you might want to listen up before you clock in for your next shift. For years, there's been this idea floating around that tips are just a little bonus, extra cash in your pocket, no strings attached. Maybe you've even heard co-workers say, "Don't worry, nobody really tracks tips," or "It's just cash, the IRS doesn't care." But is that really true? Let's break it down. Here's the real deal. The IRS treats your tips just like any other income you earn. Whether you get them in cash, on a credit card, or even through a payment app, those tips are considered taxable income. That means you're supposed to report every dollar you make in tips, just like you would with your regular paycheck. Yup, you heard that right. The government expects you to report and pay taxes on every single dollar you earn in tips. It doesn't matter if it's a $1 bill or a $100 bill. If it's a tip, it's taxable. And if you're thinking, "But what if I just don't report it?" Well, we'll get to that in a minute. So why do so many people believe there's no tax on tips? Maybe you've heard rumors in the break room or seen posts online claiming that new laws are letting workers keep all their tips tax-free. It sounds amazing, right? But let's dig a little deeper. The truth is, there's a lot of confusion out there. Some of it comes from changes in state laws or from new employer policies that sound like they're giving workers a break. But the reality is a lot more complicated, and not everyone gets to skip out on taxes. In a few places, lawmakers have tried to make things easier for service workers. Maybe your state passed a law that changes how tips are taxed, or your employer has a new policy about reporting. Sometimes these changes mean that certain workers don't have to pay taxes on some or all of their tips. But, and this is a big but, these rules are the exception, not the norm. Spoiler alert, not everyone qualifies for these breaks. In fact, most service workers across the country are still required to report and pay taxes on their tips, just like always. So if you're hoping to get out of paying taxes just because you work for tips, you might be in for a disappointment. Whether you get a break depends on a few things: where you work, how your boss reports tips, and sometimes even what kind of job you do. For example, some states have special wage laws that affect how tips are taxed. In other cases, your employer might be required to make up the difference if your tips don't bring you up to minimum wage. But these situations are pretty specific, and they don't apply to everyone. Let's say you work in a state with special wage laws, or your boss is one of the few who actually makes up the difference between your tips and the minimum wage. In those cases, you might see a little extra in your paycheck, or you might not owe as much in taxes. But for most people working in restaurants, bars, hotels, or as delivery drivers, the rules haven't changed much. The vast majority of service workers are still expected to report all their tips and pay taxes on them, just like any other income. That's the reality, even if it's not what you want to hear. So what does this mean for you and your co-workers? It means that unless you're in a very specific situation, you're probably still on the hook for taxes. And if you're not sure what the rules are in your state or at your job, it's worth asking your manager or checking with your HR department. At the end of the day, most service workers still have to pay Uncle Sam. It might not feel fair, especially when you're working hard for every dollar, but that's how the system works right now. Now you might be thinking, what if I just don't report my tips? Who's going to know? It's tempting, especially if you're getting paid in cash. But before you decide to skip reporting, you should know the risks. The IRS has ways of checking up on tip income. Restaurants and other employers are required to report how much their employees make in tips, and sometimes they even estimate how much you should be making based on your sales. If your reported tips seem too low, it could raise a red flag. If the IRS thinks you're not reporting all your tips, you could get hit with fines, have to pay back taxes, or even face an audit. That's a headache nobody wants. And if you get caught, it could cost you way more than you saved by not reporting. But there's another reason to report your tips that a lot of people don't think about. When you report your tip income, you're also building up your Social Security and Medicare credits. That means when you retire, or if you ever need disability benefits, you'll actually get credit for all the work you did. If you don't report your tips, you could be shortchanging yourself in the long run. Bottom line, nobody likes paying taxes, but reporting your tips is about more than just following the rules. It's about protecting yourself, your future, and your benefits. So what can you do? Keep good records of your tips, know your state's rules, and don't be afraid to ask questions at work. If you're not sure how to report your tips, talk to your manager, your HR department, or even a tax professional. It's better to ask now than to get in trouble later. And if you want more real talk about your paycheck, your rights as a worker, and how to make the most of your hard-earned money, you're in the right place. We're here to break down the facts, clear up the rumors, and help you get the info you need to make smart choices. So smash that subscribe button, hit like if this helped you out, and drop your questions or experiences in the comments below. We want to hear from you. What's your experience with tips and taxes? Let's help each other out and make sure everyone gets the facts.